let's take a look at a risk event for the week starting Monday, the 20th of May. I'm looking forward to midweek next week, Wednesday, the 22nd, release of the full round of UK inflation data, and it's likely to generate raised levels of volatility around sterling against whichever currency you want to trade it. But I'll be taking a look at what's happening with sterling against the US dollar. As ever, it's consumer prices that will likely steal the show, although there is the release of the producer prices, there's a release of retail prices as well. I want to take a look at the chart where we could well see this volatility. We're currently trading as we go into the start of the European trading day on Friday, as we look ahead to this number at 126.63. UK headline CPI forecast to drop from 3.2 to 2.7%. Core CPI, that's without food and fuel, down from 4.2 to 3.6. So potentially there is a possible risk on the downside. That's if we get a read through from this week's US inflation, which gave us a ray of hope that the risk is to the downside. So let's set up a trade here. If you're short at 126.63, your stop goes above the 127 level, and the levels to watch out for. This is the main level down here at 123, but we're unlikely to get there in any way, shape or form if you do even nonetheless get a very weak number. But I think what it's going to do is going to highlight the fact the Bank of England's likely to cut interest rates in August. So from 126.63, price target 124.46, these lows that we had here back on the 9th of May. And I suspect if you do this correctly, and it does move in the way I expect, if we do get that risk downside, that the stop loss goes above the 127 level, which will give you the protection. If it does continue to move in this downwardly direction, continue to bring your stop loss in to lock in profits.